So Anas, welcome back to Face. Glad to
Hey, good
have
morning.
you. Yeah, glad to have you. So, you stole my opening questions by what you sent me in a DM, on
Well, you are going to say it
X.
anyway. So,
Okay. No, I mean, let me show the picture. That's really, that's why when I was promoting your talk here today, I know that there are a lot of traders that are really confused. And you're saying that they got this call wrong. Okay, so they got this call wrong, but they were still able to push the market down pretty heavy. So, um, tell us how they got the call wrong on the last OPEC
all right.
meeting.
If you allow me to share some slides, please.
Oh, sure. Okay, I'm going to stop sharing. And do you want me to share the link to your Substack article, or is that for
But please do. Yes,
subscribers?
please. Please. Thank
Okay,
you.
so I'll put it
Thank
in
you.
here. So if you guys
Okay.
want to read uh, Anas's latest. There it is. Okay, go ahead. Share
Thank
your
you.
screen.
Uh, what
It's at the
happened to my
bottom.
screen? Yeah, I'm trying to find it. Just disappeared on me. Uh, okay. For some reason, it disappeared on me here.
Okay, well, you just put
Okay.
your cursor at the bottom of the screen and all these different icons will pop up. And the green one says share screen.
I'm just closing those things here. See what. All right. So let's start. I'll start talking until I figure out how to get this done because somehow the screen got messed up here. Okay. Basically, what happened is we have three things that happened on Sunday when OPEC met. And some of these things basically are related to the following. First of all, we were the only one in the world who published a report before OPEC Plus meeting, pointing out that there is no confusion about whether the meeting is in person or virtual, because that was the confusion in the media. And the point was that the OPEC meeting itself is virtual, the OPEC Plus meeting is virtual, but those countries who cut production voluntarily will meet in Riyadh in person. So that's number one. We also published a report 2 days earlier before the meeting, and every single prediction we made basically came true. So people, our clients and readers basically were ahead of the curve on what OPEC would decide and what are the implications. Do you see the slides now?
Yeah, we got them up there.
Okay.
And I see it going through. Yeah,
So
you have
let's
the
start with this. I have many slides and I have to do it quickly because of the limited
go.
time. If
Okay,
you look at the
go ahead.
latest OPEC report, there is a new one coming up in a couple of days. But if you look at the latest, it's for the first time in history, basically, OPEC is switching from OPEC to OPEC Plus. So it seemed that little by little, they want to kind of do away with OPEC and move to OPEC Plus. So the data sets that they are providing is for OPEC Plus from now on. This is very important. The other point here is they did not use the expression OPEC Plus. They used the expression of DOC countries. DOC, that declaration of cooperation that's been signed between OPEC and non-OPEC members, including Russia, in 2016. So now we have a new expression in the oil business. It's DOC countries. So that's number one. Number two, the media basically got the confusion about whether the meeting is in person or virtual, etc. They got it wrong too, and by looking at what they said about the voluntary cuts, the voluntary cuts have nothing to do with OPEC Plus in the official meaning of OPEC Plus, because those are subgroup. They decided on their own to voluntarily cut production. So OPEC meeting or OPEC Plus meeting has nothing to do with it. Those guys have to meet separately. So the
Okay,
media
well,
got.
let me ask you. You got this all right, and you were right, but the market sold off about $5.
Correct. So
So if
I'll
you were
explain that.
okay, so when that came out, what did your subscribers say about the price action, because there's probably some people that got long before the meeting based upon the fact that you
First
said
of all,
the media.
we have several issues. The first issue is traders, investors, speculators, etc. You name it. They have a completely different time horizon from
Okay,
OPEC time horizon. So
exactly.
even if you look at their document, they are looking at the end of 2025, while those traders were looking at hourly and probably like every
Yeah.
minute or second, etc. So the time horizon is different, and we cannot make the comparison.
Okay.
So that's number one.
Well,
Number
you
two,
could have seen it as a buying opportunity a few days later.
correct, correct.
Okay.
That's correct. The other issue is if you look at the document itself, it says that we are going to unwind production. And by the way, we were the only one in the world. A month earlier, we said that OPEC Plus is going to increase production this year, and we did it because we had a comment from the Iraqi oil minister who said we are going to cap production at May levels to the end of the year. What that means? They were violating their quota, they are overproducing, and it meant only one thing. It meant that OPEC Plus is going to increase production, and therefore we are going to cap our production. And when they increase the ceiling, we are going to count the difference as compensation for our earlier overproduction.
Okay. All
So
right.
it was very clear to us that they were going to increase production. So they decided to unwind the 2.2 cuts. So let me summarize this. They have three cuts. The first one is OPEC plus cut. That is extended to the end of 2025. It's 2 million barrels a day from October 2022. The second one is voluntary cuts, is 165 million barrels a day, and that is extended to the end of 2025. And then the third cut was extended until the end of June, and now they extended that until the end of September. This 2.2 million barrels a day of voluntary cuts will be unwinded starting October. So the market took that as negative at a time when the tech stocks basically were going up. And you and others know, well, we've seen this over the years. When tech stocks are doing very well and oil is not doing very well, we see this migration of funds, basically, of money. So two things work together here. We cannot ignore what's happening in the rest of the market while the oil market is going down. So two things basically made things bearish. So people understood the unwinding as or additional production, and they assume that all the cuts will come back. And this is a problem. So let me show this slide. First of all, this is OPEC crude oil production, and you can see where the red line is. It is almost 2 million barrels lower than 2019. So those guys are making the cut. You look at exports, exports are way lower. That's for OPEC plus, and it's about 800,000 barrels lower than the last year. So they are making the cuts. And if you look at the plans, this is the plans. These are the cuts. The two. So again, this is not the actual production. These are the plans. The lower one is the 2 million from OPEC plus. The yellow one basically is from the voluntary cuts of 165, and the above one is the 2.2, and you can see the unwinding. This is the plan. So what the market saw is this unwinding, that the difference between the top and the bottom of it is going to be added to the market. That's wrong. First, they already said in their documents that they will unwind only if the market permits that, if the market situation accepts it. If the market situation does not accept it, then there will be no cut, no unwinding. Number two, they have to compensate those countries that increase their production at the beginning of the year over their quota. They have to compensate. That compensation is going to come out of that. So it's going to be even lower. The production is going to be lower. At the same time, we all know that demand increases in the summer months. And if the summer months are really hot in the Middle East and North Africa, what happens? The demand for cooling increases. The only way they can really generate extra electricity is to use fuel oil and some sort of diesel. So the demand for oil in those countries will go up. and therefore their exports will go down. Exports matters because that's really what the supply of oil in the world is, not production. And OPEC focuses on production, not exports. So exports decline. And whenever there is a heat wave in the Middle East, there is another heat wave in China. And in China, we end up with private generation as a result. And private generation, that means it's a shift from renewable energy, gas, and coal to oil. So there are, of course, other points, but the idea here is that unwinding, if it happens, it will be way lower than what the market expected. However, we do have serious problems. If you look at this slide here, that's Iran's crude oil exports. It's been increasing despite the sanctions. Under Biden, Iran is making more money than ever. Not ever, of course, but since the sanctions have been reimposed since 2018. And this is Venezuela, despite the sanctions. You can see that their exports are going up.
Who's the buyer? China?
Mostly China. But they sell to other countries. But in most cases, it's China, especially the Iranian crude.
Okay.
And Iran basically was selling to Europe. But the problem is Europe is not paying Iran in cash. They are paying them into escrow accounts that Iran will use later when the sanctions are lifted. But China pays them directly. So that's why they like China. Here is the problem that we have in the market. Until today, we are in the middle of the year, and there is this confusion about the growth in global oil demand. This is a serious problem. What we see in this chart is OPEC predictions of growth in oil demand versus the International Energy Agency's predictions. And there is a major difference. For the whole year in 2024, OPEC expects a growth in oil demand to be 2.2 million barrels a day. 2.2. While the IEA expects half of that, 1.1. So we have a serious problem. Our prediction since December is 1.48, so 1,480,000 barrels a day. And based on that, what we see is if OPEC start unwinding with all those caveats that I mentioned, we will be fine. We are expecting the market to go sideways for the rest of the year. So there is no reason to panic in terms of being bearish, etc. At the same time, we are not bullish on oil. Here are other problems with demand. This is China's gasoline demand. Yes, it is higher than the previous years, but it is declining. The problem is other types of oils are declining. For example, in April, while you see here that it is higher year over year for gasoline, total oil demand is lower by 3% than the previous year. So China has a problem. And then you look at China's imports from Russia, year over year, it's flat. So that confirms the idea that there is a problem in China. And then you look at India.
Slow growth?
Slow growth, yes.
Contraction? Okay.
Yes. Well, slow growth.
Okay.
And you look at India. Let's face it. Data in the oil market been deteriorating since 2017. And the situation got worse during COVID. After COVID, it got way worse because of the Russian invasion of Ukraine and the sanctions on Russia and all those ghost fleets, etc. The problem is when it comes to the media reporting, so we're not talking about the data here, we are talking about media reporting, especially from major agencies. We see deterioration in reporting big time. And the reason why, because we have two major elections in the world, the United States and India. And what we see is we see a tilt in the oil stories to praise Biden in the United States and to praise Modi and his policies in India. And that, if you look at, we collected a large number of stories that were fake stories or tilted stories or twisted stories. And if you go and look at India, there was a lot of exaggeration about India's economic performance, oil imports, etc. Here are the facts. These are oil imports. And you can see, you can look at the latest red bar here on H513, 5,130,000 barrels a day. It's almost kind of like virtually flat relative to last year. So where is all this economic growth they are talking about, and all this demand growth for oil? It's not there. So there is a lot of exaggeration about India. So China is weak demand. India basically is weak. Look at the United States. The United States is weak, but I want to show you something very important. And I think many of us suffered from this. This is the number of travelers by planes in the United States. Sorry, this does not belong here. Okay. So you can see the red, it's higher than before, and it's a record high. So more people are flying by planes and traveling by planes in the United States. Now, you might think, well, this is positive for jet fuel demand. And the fact is, that's not the case. Look at jet fuel.
Okay.
It's lower, way lower. So what happened is we have crammed planes, crowded airports. People are complaining about the service on airplanes and all that stuff. Then we have Boeing problems and the banning of flights of certain type of planes, etc. So we have a decline, or at least you can say it's flat, lower than previous years, but the number of passengers is increasing. Now, the rest of the world has a completely different picture because we see some increase in jet fuel demand, but not in the United States. And this is a serious problem for those who are complaining about airline service. Well, here is your story right there. We don't have enough planes. And then I'm going to conclude. I still have only two. You look at commercial oil inventories. This is the global inventories with oil and water and floating storage. And you can see it is high. And it is, you can see the red line here. It's higher than the previous years, close to the upper limit of it. And if you exclude oil and water and floating storage, because this decline in June is really floating storage, then commercial inventories on their own are really high. So that's a serious problem. And there is a general mistake there because those who are bullish and trying to promote their stories, they are using inventories with strategic petroleum reserves in it to show that inventories are at a very low level and therefore prices will go up. That's a complete nonsense. We cannot include the SPRs or the strategic inventories in those charts and be bullish because of that. Look at the United States. This is the red line again. And you can see that inventories in the United States, that crude oil inventories, are at a really comfortable level. To be bullish from the US data, we have to reduce this by almost 55 to 60 million barrels.
Okay.
Will we get that in the summer? We'll see.
I have a question for you.
Sure.
I ran into a video where it was contended that the US and Saudi had an agreement, I believe went back to the Nixon administration, a 50-year treaty for Saudi selling oil in dollars that expired Sunday. Is that true? And will there be any impact?
That was a clickbait. I refuse to be involved in it because I don't want to promote the video or all of that discussion. It's a complete nonsense, completely fake news. First of all, and I'm saying this on your show, I challenge anyone in the world to bring any hard proof that there is an actual agreement between the United States and Saudi on using the dollar for oil.
Okay. I knew you would clear it up.
That's number one. Number two, to be dated. So there is to say 50 years. It's a complete nonsense. The confusion. Do we have time to
go ahead.
Okay. The confusion came from the following: when the United States decided to float the dollar value went down. Oil was sold for $1 even before that. And all the oil in the Middle East was completely controlled by European and American companies. It wasn't controlled by governments. Governments had no say.
Okay.
But when the dollar value declined, of course, they get dollars and they felt that they are losing money. So OPEC met several times, and they conducted secret studies and public studies. And they commissioned like the best professors and the best consulting houses at that time to try to find out a way. And several solutions were proposed. And they found out that none of the solutions are workable, because switching to another currency will have the same problems of the dollar. And to look at a basket does not work, because OPEC is scattered throughout the world. The trading partners of Indonesia are different from the trading partners of Venezuela, different from the trading partners of Saudi Arabia, and therefore the basket means different things to others. So a basket does not work. They looked at the IMF SDRs. They found out that the dollar has the lion's share in it, so it does not make any sense anymore. So they found out, well, the dollar is still the best choice. But what the US convinced them was, what you are worried about. They said, look, inflation is very high. Interest rate basically is very low. I have a lot of money from oil sales, and my economy cannot absorb that investment. Those economies were very primitive at that time. Okay. So what I'm going to do with the money? And the US guaranteed to them that if you invest in treasuries, I guarantee you a steady income that cannot be confiscated, because they were worried about confiscation.
Interesting.
So indirectly, by agreeing to invest in US treasuries, it meant selling the oil for dollars.
Got it. Okay. So was there was no formal treaty? It was just an oral agreement.
I mean, about the treasuries, we don't. About the treasuries, there could be something, but it is the whole idea of the dollar, in my view, came in through investing in treasuries and a guarantee that the money cannot be confiscated.
Are the Saudis still buying treasuries? They're
not really, because they've been selling treasuries, and the reason why, and this is kind of misunderstood in the media too, simply they are creating this massive fund, the global fund, the PIF, and they think that if I take that money and invest it wisely, I make more money, and I will get more political clout and more economic clout. So they've been cashing in and converting the money to other investments.
Okay. Saudi Aramco going to go public?
It is already public.
Well, I mean, put out more stock.
Correct. This is an old plan from 2018, but they delayed it because they thought at the beginning that they are going to list in London and New York. But since they did not list, they delayed the sale. And finally, they decided, what the heck, I can do it through the Riyadh exchange and just focus on it, bring in foreign investors. And the fear basically that, and this is my personal view, that if they move to London and New York, it comes with financial and political baggage, and they don't want that.
All right. Biggest geo risk. Are you concerned with any geo risk about supply?
At this time, no. I think the Biden administration is keen on keeping oil prices down. We might see whether they will withdraw oil from the SPR in August and September, because there is no filling of the SPR in August and September. So I think if prices go up and WTI get closer to 90, they will use 30 to 60 million barrels from the SPR. The issues are all after the election. We published a report yesterday on Turkey, and some people basically said, why Turkey? I don't care about Turkey. Well, you should care about Turkey. Here is why. Because Turkey and Azerbaijan might halt oil exports to Israel. That's going to affect the Biden plan and the Israeli plan in Gaza. And the other issue is, after the elections, the Biden administration might put pressure on Erdogan to anti the relationship between him and Putin when it comes to re-exporting the Russian oil. So it has a tremendous impact on the market, and that's what we wrote in the report yesterday.
So in that statement, are you predicting a re-election of Biden?
No, I am just saying that if Biden got re-elected, we will see a completely different policy after the election from before the election. His policy right now is to keep oil prices low. After the election, he is going to go after his geopolitical game.
And if Trump is elected?
Well, I know a lot of people are going to get angry at me when I say this. When it comes to the oil industry, President Trump is one of the worst presidents in U.S. history. People got to realize that. But people want Trump because they hate Biden.
Okay.
I'm talking about people in the oil industry. But if you look at it.
So his drill baby drill is just a cheer.
Well, drill baby drill is one thing. Getting prices at 100 and 120 is something else. So why drill if oil prices are going to be in 70s? That's the issue. Trump, I have an article on my website. Is Trump an oil zealot or anti? Is Trump an anti-oil zealot? Look at his history. He's been against the oil industry for decades, and he's still against the oil industry. Look at the relationship with Saudi Arabia, an outlier in this case. But he's been against the oil industry all along. He never invested in the oil industry in the first place. And he wanted low prices. And even if you look at Harold Hamm, who was his advisor, his energy advisor, Harold Hamm in the fourth quarter of 2018 lost $1 billion because of Trump's decision. $1 billion, just in one quarter. The oil industry itself suffered greatly at the end of 2018 and in 2019 because of his decision.
Interesting.
So yes, he is going to allow drilling, but prices are low. Who is going to drill when prices are low?
Anas El-Haji does not pull any punches. He says what he means and means what he says. And I want to thank you for coming in over these years, Anas, and giving us the straight dope in the oil industry and always straightening me out for me being.
May I mention just one statement before we leave? I think this is an important statement. Since you asked me about the dollar and people are saying, well, the Saudis will go to the Chinese yuan and they join this club in China, etc. It is very clear to me that the Saudis are keen on obtaining Western technologies. They are not interested in Chinese technologies. So Chinese, yes, they are good for building pipelines or some stuff like that.
Not AI.
Not AI, not nuclear, so that's why the Saudis are keen about obtaining the US nuclear technology or the European technology. They don't want the Chinese technology, whether this or others. And therefore, when you look at the Saudi-US relations and the issue of the dollar, this is a historic strategic relationship. And the Saudis are keen on obtaining Western technologies, not Chinese technologies.
That is a great way to close it. And you know what? We're keen on having you back at the end of the summer, and really appreciate you, Anas.
You're welcome.
People go check out Anas. You find him on X under his name, Anas El-Haji, and there's his where you could get his Substack and sign up for his newsletter. If you're an oil trader, you could see that I fall prey to clickbait, so I'm sure I'm not the only one.
Dale, we also started Twitter subscription, which will
private feed.
Some special materials for subscribers.
Okay, a private feed also going on X. So thank you, my trading warrior brother. Inshallah.
Inshallah. Bye.
All right, everyone. That's Anas El-Haji. Hope you enjoyed it. We record these so you could always go back and check them out. And you could join the team in 14 minutes on the morning edge. Don't just count your barrels of oil. Don't just count your pips, count your blessings. Good turnaround Tuesday to everyone, and we'll see you tomorrow. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.